Hello, everybody. I think there was a technical difficulty when I tried to launch this about 10 minutes ago because there was nobody here on the live stream. And I think I accidentally had set it to private. So now let's see if it shows up here. Yeah, now it's showing up. I'm live. Welcome to Analyzing Finance with Nick live stream. We are here to celebrate 20,000 subscribers and Halloween. But so I'm very honored that the channel has gotten to this size, and I hope you like the content that we are doing and that we will keep going. And the way I'm going to do this really is the same way I did it last time. I had several questions that people ask in advance. I will read those, and then afterwards, I will do questions in the chat. So if you have anything you want me to answer, please put it in the chat. But first, I'm going to do the prepared questions because these people gave me time to prepare. And if you want to cut in line, you could always super chat. All right, without further ado, let's get started. First question really is the BRICS currency is going to be rolled out soon. What's your thought on how to take advantage of this new contender to our dollar? Well, first of all, I just have to disclose nothing really is trading advice on this live stream. If you have any specific questions about your investments or your portfolios, please contact me directly. And with that out of the way, the way if you want to capitalize on the BRICS currency being rolled out, it'd be to buy gold, because the only way the BRICS currency will ever be a threat to the US dollar is if gold prices go up a lot and or the BRICS countries buy enough gold so they can back their currency in circulation with gold. Like, nobody's going to switch away from the US dollar unless if it is backed by a superior currency. And the way to be a superior currency is to be a hard currency backed by gold or real estate or silver or some other hard asset. And China and the BRICS countries simply just don't have enough of it. If they were to have more gold, like let's say if they were able to 10 times the amount of gold that they have, and the PBOC is one of the biggest buyers of gold right now in the world. So this might be why they're buying all this gold, is to try to really take a puncher's chance at making this BRICS currency viable. Then it's a threat. So the thing to really watch is the pace and the duration of Chinese central bank gold purchases or increased domestic gold mining in the BRICS countries. So yeah, and thanks for the comment, Senor. A gold mine of information, and literally, they're going to need the BRICS countries are going to need a gold mine worth of gold if they want to be able to have a viable currency. The next question that I have is, what's the most dystopian scenario in the U.S. that you think is possible? Well, it depends. Do you want politically dystopian, socially dystopian, economically dystopian? Because those are very different things. And I think the most likely of the really truly dystopian, I'm not going to just do things that people think are dystopian that are really not. If you want that, you can watch Debunking the Doomer. Is the real risk of, and I'm going to probably alienate some of my audience with this one, the real dystopian risk is authoritarianism in the United States. And that really, I'm not worried about this election, but let's just say the next 2-3 election cycles, or possibly early as 28, you could have an election that could possibly be the last free and fair election in the United States, and really be deciding that between the authoritarian right-wing party or the authoritarian left-wing party. So it's basically, you're just basically choosing your ideological flavor for how you want your authoritarian government. And authoritarian in the sense that not necessarily it's going to be like a totalitarian state that has cameras everywhere, but more in the sense that you just won't have a vote. You'll not be able to participate in the democratic process. The there'll be a one-party state, kind of like how you see in other countries, or how privately held companies are run, and the party will select who's in charge, and that is really the biggest risk, because given the demographic trends and how the internet has fragmented our culture, and basically a lot of people can't even agree on what basically is right and wrong in the society, along with the economic issues that are creating more social tension, and social media making people more aware of the disparities that are going on in this country, that democracy is increasingly unstable. And we've had similar profiles of countries. This is the time when they transition from republic to empire. And that's a spooky one. I'm not saying it's going to happen in 2028, but I think of all the dystopian scenarios, the removal of Western democracy is the most likely one. Next thing I am going to answer is the airline industry in perfect competition? If so, how do they make a profit? Also, what is better, a monopoly or perfect competition? That is a long question. And again, if you want your questions in the chat to cut, just leave a super chat. But the airline industry is not quite perfect competition, because you have the main barrier to entry as airport slots. Like LAX or JFK or Chicago has only so many spaces for planes and gates at their airports. And airlines can have an edge by locking in a deal to maintain those slots at the airport. So if you want to fly from one airport to the other, you have to go through the airline that has the rights to use the gates. So that's what prevents it from being perfect competition. Also, a lot of international barriers and regulations. Like, for example, an international airline in America cannot fly from one domestic destination to the other domestic destination. Whereas the reason why air tickets in Europe are so cheap is because most of them are cross-border. Like if you're flying, say, from London to Paris, it might be the same distance as, say, flying from LA to Phoenix, or even closer, I think. But since they're in two different countries, the local government's rules banning foreign competition, which is common for most countries in the world, do not apply. And so it's a lot cheaper to fly across Europe in the same distances than it is in the US, due to just how big the US is. If you allowed international competition for airlines, it would probably make it truly free competition. And what is better, monopoly or perfect competition? Well, it depends if you're the business owner or if you're the consumer. Perfect competition is better for the consumer. It means that you have lower prices, probably higher quality, and there's not really much room for exorbitant profit margins, or really abnormal profit margins at all, because some lower cost competitor will come in and take your share. Whereas if you're a business owner, you hate this, because perfect competition is a terrible industry to make money in. And for airlines, it's very unprofitable historically. Like Warren Buffett always used to complain about how he hated investing in airlines. And there was a brief time when you had a lot of airline mergers in the mid 2010s, when they all of a sudden became profitable and were able to raise fares. But now, with the culture of antitrust starting to change again, and more competition coming on board, such as Allegiant in more recent years, it's made it going back to a more competitive market. So yeah, airlines in general, I would say they're a monopolistic competition. They have some brand power. They have the rights for the slots of the airport. They have some protection against international competitors, but it's still a fairly it's a fairly competitive market. The next question is, I commented on your October 6th article regarding the disincentives to climb out of dependency. This topic, unfortunately, goes to the crux on what our ruling class is doing to ensure that few people try. Yeah, I think I'd probably have to say that. You can watch my video. Well, you probably have all seen. That's probably how you found me, is why old money supports the left. If you found me through a different video other than the old money series or a what if alt hist reaction, please leave it in the comments, because I'm curious about where you guys found me and my channel. The next question I have is, can you please do more social hierarchy videos of different countries and systems of government. I have done those. I did one about emerging markets and the myth of the emerging market middle class. I've done one about Europe. I've done one about the US, of course. And I have done one about authoritarian, like one party states like China and Russia. And I batch them into groups because not every individual country has a very unique hierarchy in a sense, but they're usually based on the underlying form of government and the level of free competition. So you have like the Anglo colony countries tend to have a certain type of class structure. Continental Europe has one, and there's also other non-Anglo developed countries tend to have that structure too. The authoritarian states have one, and the emerging market states have one, and most countries fit in those four groups. The only maybe exception are places with institutionalized caste systems from a historical perspective, but that's kind of something that may be out of bounds for really the topic of this channel. And I saw a comment about the iceberg series. Speaking of the iceberg series, there's going to be a special iceberg related videos that are going to be released for Thanksgiving and Christmas for all you subscribers. I didn't do one specifically about the UK, but I'm just assuming the UK structure is similar to the European one, or it's like a hybrid between the American and the European one. I did a video about the economic future of the UK back when Truss was the prime minister, but it might be due for an update. So the next question I'm going to be is, what are the economic impacts if we stopped using money as our currency and switched to bottle caps like in Fallout? I mean, look at prisons. Look at places that used cowrie shells in the old times. Like, it's really just the money by definition is a medium of exchange, a unit account, and a store of value. And in the Fallout world, bottle caps really served as that, but I don't really think it makes really any difference. Bottle caps just be like quarters or dimes or nickels today. The next question that I have is, can you lay out your position on tariffs? In what ways do they help the average citizen, and in what ways do they hurt? What would your ideal U.S. policy concerning trade with allied and more hostile countries? Okay, this is a good question. First, tariffs are another tax. You have to look at it that way. There's no free lunch in economics. Tariffs are like property taxes or income taxes or sales taxes or excise taxes. They are another tax. The question really is, are tariffs a better tax than the other taxes out there? And I'm going to be doing a video in December where I go into detail, where I break down all of the 5 main types of taxes, which are income tax, sales tax / VAT, tariffs, property tax, and inflation tax, and the pluses and minuses of each one. So that is that's kind of where I view tariffs as another form of tax. So my views on tariffs, how they compare to other taxes, I do in more detail in this video, but what I'll tell you now is that I think it's far better than income tax. I just from a sense of economic fairness and in terms of efficient outcomes. The problem is that relying on a tariff for a government is that it's too easy to work around. If the country that's being tariffed just ships it to an intermediary country who is an ally, they can get around the tariffs that way for a small fee for the intermediary country. If they're too successful, kind of like vice taxes, if they're too successful at the goal and people switch to domestic manufacturing, then the government's revenues will fall to levels that are too low to keep it afloat. And the reason why the tariff worked so well before we switched from a tariff to an income tax model is because the government had a much smaller role in society and didn't do nearly as much. So the government didn't need as much funding because there was nothing like Social Security or Medicare or the liberal international order and the military all over the place. They just had a lot less responsibilities, and therefore they needed a lot less funding. Tariffs were basically around since this country's independence all the way to the turn of the 20th century. So, just to answer that quick follow up question, and that's the main downside of tariffs. In terms of what I don't think tariffs are the best way to finance a government. Uh, I think it's better than income tax, but there's a better form of taxation, I think, than both income tax and tariffs, and I'll be talking about that in the video. And my ideal policy on trade generally is that you put the tariff on that the other country puts the tariff on. In an ideal world, there are no tariffs. Everybody freely trades with each other, but you have to have countries follow the similar rules of the game. So if, say, for example, there's a hostile country that has 100% tariffs on all US exports, then it's not really fair for us to be giving them zero tariffs to enter our country. Or and so like you basically say it's like you say, hey, look, we'll lower our tariffs if you lower yours, and if you and also you have to play by similar rules on other practices that so that you have fair competition. The only reason that you'd have tariffs is to help finance the government, one, and two, to help regulate competition so that it's more fair. Like it's you can't have countries who have no environmental standards um, have or have punitive tariffs against you and expect to have like a balanced trade. However, I think that for the most part, a lot of this stuff can just be fixed through competition, and I like lower tariffs as long as other countries are willing to lower their tariffs to match. Uh, Next thing I'm going to talk about is how do progressive and regressive taxes affect the barrier to entry for new entrepreneurs and middle class families' purchasing power? Well, yeah, progressive taxes are very bad for ambitious middle class and upper middle class people because the more money you make, you get hit with those higher tax brackets. And so, therefore, the marginal effort to work that additional amount to go to the next level is being punished. Like I've seen some charts about Germany, where like if you make 2,000 euro a month versus 7,000 euro a month, based on the social benefits paid and the progressive taxation in that country, you basically are getting the same take home pay. And that incentive destroyer really kind of suppresses entrepreneurship, it suppresses ambition. It really just is a big demotivator, and it just discourages people to strive. In terms of regressive taxation generally hurts the poor. If example would be like a gasoline tax. If you're driving, everybody pays the same tax per gallon, but if you make less money, you're paying a lot more percentage of your income in gasoline tax. And some regressive taxes are fine if the goal of the tax is to discourage certain bad behavior. But like a gasoline tax, I don't really consider driving to be bad behavior, and people need to get to work. Not everybody has EVs yet. So I think regressive taxes are fine if they're more used as a policy driver to discourage certain behavior. But as a way to raise revenue, they kind of just also have a problem because it hurts the people who have the least means to pay it. But there are ways you can design consumption tax around that. So it's not entirely consumption tax is a problem. But I'm going to do that more. I'm doing a much longer video about the merits of each form of tax. In this, um, let's see. How do tariffs affect the economy and the price of goods? Well, they will make foreign goods more expensive, and components of goods in the U.S. that are from foreign countries will those finished products will be more expensive. Uh, a lot of people like tariffs because they protect the wages of um, people who work in industries that are no longer competitive on the open market. And also there's a strategic reason. So say, for example, like if you're worried about potential geopolitical conflict and you want to have a certain industry in your country, because if global trade shuts off, you're going to have a major issue, such as semiconductors being all in Asia or medical equipment being manufactured all overseas during the pandemic. That was a major geopolitical choke point that needed to be resolved. And so those are kind of the drivers, or more of strategic drivers than a purely like maximize standard of living drivers. Like tariffs, again, are like a tax. People are going to pay. There is a cost. It's just that can these tariffs be raised, and can these tariffs raise enough money so that we can cut taxes elsewhere and it balances out? That would be the ideal. And in terms of how they affect the price of goods, it really just depends on what percentage of the price of a good is from the part that's made overseas. Like, say, for example, if it's a high-end luxury good that is entirely made overseas and it's just shipped on the boat here, and like the attendant and the rent at the store that's sold at is maybe like 5% of the cost, then like, yeah, 100% tariff is going to increase the cost of that luxury bag by 80%. Or maybe less if the market just can't bear that higher price, but in that loss then will go to the producer. However, if it's something like a product that the manufacturing part overseas is a relatively low cost, like if it's a component, say, of like an engine for a car that's mostly made in the US, and you have to import this one part from another country, and that part now costs double, and that part's only 1% of the price of the car, then the car price is only going to go up 1%. Like an example of this would be a fruit. Like, if people worry about like the fruit not being picked due to immigration, for example, but if you look at the cost of hiring the labor to pick the fruit in these farms, it's only about 7%. So if you had wages double for farm workers, your apple would go up from $2 to $2.14. So you have to really look at it's on a product by product basis where the impact of the tariff is how much it's going to affect your costs. And given the fact that most consumer budgets in the US are spent on housing, healthcare, and locally produced food, and for many parts of the country, locally produced energy, like it's not going to be as big. Most of the stuff that we import is discretionary goods. And if people can cut back on that, if they don't want to pay the higher cost of the tariffs, you're going to have to just buy less like sporting equipment, less electronics, less clothes. Like that kind of stuff is where it's going to get hit. Like this necessities will not get hit really as hard. So overall budgets are really not going to be affected. It's more discretion. It's actually indirectly that way, kind of a progressive tax if you really think about it. But that's just me thinking out loud. In the U.S. economic climate, what financial approaches are available to 9-to-5 workers that would lead to financial growth? How much, and also how much impact does geography have on financial maneuverability for wage workers? Also, if it does have quite impact, what ways can we present opportunities and limitations on the financial approaches available? This is a long, complicated question. And if whoever asked this, if it's something more personal, please just contact me directly. I have a new website, nickpardini.com, which shows all like the little summaries of the services that I do for my main businesses. And also there's a contact form where if you want a more personal question, you can schedule a 15-minute consultation with me, or like write it in the form, because I can't ask direct personal questions over the air on something like this. But for a general person, for wage workers, to put it on a more macro level, I would say really the goal of a 9-to-5 job, if you're an ambitious person who wants to move up that class ladder that I mentioned in the videos, a job is really extended education. It's you learn how a certain industry works, certain skills in the industry, where your talents fit in, what can you do better than 95, 99% of people. And then once you find that niche, you start a business in that niche. It usually takes about 3 to 5 years to do this. Some industries that are more specialized or require much higher capital costs, it might take a decade or longer. Other faster moving industries, lower capital costs, it can be faster. But that's how you look at it. You look at where are the opportunities that I can provide value into the market independently, and that's how you really move ahead. Um, in terms of geography, you have to outweigh the advantages of opportunity versus cost of living. Like in terms of the most access to opportunity, it's probably places still like New York and San Francisco and Los Angeles, just because they're the biggest cities. They have some of the wealthiest cities. San Francisco, particularly, still has a lot of venture capital, but the cost of living is prohibitively high. So your burn rate, if you're going to live there, is going to be much higher. You have to save a lot more money to live in a place like that um, than you would at a lower cost of living place if you want to strike out on your own. And therefore, you have less labor flexibility. So how much of a go-getter are you to go to all the networkings or meet the right people or be involved in the community to drive that up? A bigger city is more impersonal and it's harder to get involved. Like in terms of geography, if you really want to maximize networking potential, you want to live in the affluent, older, new money suburbs of the big major economic cities in the US more than in the core itself. Uh, like watch my Geography of Wealth series if you want to know more about those dynamics. But that's kind of what I would pick in terms of geography. Because like if you live in the middle of nowhere where there's a low cost of living, yeah, you might have a low burn, but this if you're building like some software app and you're a coding genius who needs no help and you're good at digital marketing and do it all online, that could work. But if you need to work with other people, um, that makes it a lot tougher to do that, especially if you're looking for other people of similar skill, education, ambition, etc. Next question. Why can't America and the UK have lower taxes like Dubai? Like Dubai has basically no income tax and low capital gains and property tax and other things like that. And the reason is because the UAE is a major oil exporter. So they basically finance their entire government or most of it. I'm not an expert in Emirati public finance through oil. And Alaska is similar in the US. Alaska doesn't have a state income tax. In fact, in Alaska, you get paid about $2,000, $2,500 a year as the citizen's dividend of living in Alaska because they have to have a sovereign wealth fund of their own from all the oil sales from oil drilling in Alaska the last half century. So that's how they do it. The U.S. is a net oil exporter, but they don't export enough oil that they can finance an entire government through oil royalties. Neither can the UK, even though the UK has reserves in the North Sea. And that's really the simple answer to that question. How long does it usually take to research a video topic? Well, it depends how much I know about it and whether I have other reasons to research it. I run a wealth management firm. I do a lot of this research just for my own curiosity, and sometimes it's tangentially related to my profession. And I don't necessarily count that time. Sometimes I have a lot of prior knowledge, so I don't need to do as much deeper research because I've read a lot of the books. I mean, I have the book list. If you want like the 100 most relevant books to the topics I've talked about this, you can download it and you get a free email with the download link when you join my Substack. I bet most of you guys already have, but for those who haven't, that's how you get it. And so I don't have to maybe do a bunch of research, and it's just more about compiling my thoughts and thinking about how I'm going to present it to you guys. Or it actually takes me more time than research is making the charts or putting together the data in a way that I can read it to you or present it to you and that is understandable. It's like converting the idea I have into a creation that can be shared is a lot more of the work than the idea generation process itself, I think. So that is the kind of what I would say. But generally, it takes me at least a couple hours. I don't really keep track of it, so I'm sorry I don't really have a better answer for you. But my general process is that like, and now since I have so many subscribers who ask me questions, I just look through a lot of your guys' questions and feel like, what is something that these that I would want to talk about and make a video of? But I also have my own ideas. Like I'm actually releasing a video later this week because I want to get it out. I'm a little early because the election's coming up about campaign finance. and why, for example, Democrats have been able to successfully outraise Republicans over the last 5 election cycles. And the answer isn't what you think. It's not just simply they have richer donors. In fact, not that. It's actually a very different reason, but I'm not going to spoil it for you. The last pre-question I have before I get to all the live chat here is, if you were in college today, what would the top 2 careers you would gun for? Or long version, I'm not going to do that because that's again a personal question. And I think the guy Liquidity LWSO, if you want to schedule a consultation on that, just contact me directly. But like, it depends what you want. Are you trying to just make money, or do you want to do what you actually find fulfilling, or a balance of the two? Because like, if I was going to start my career, and also depends what year I'm graduating. Is if I graduated from college in 2010. So is it based on the opportunity sets that were available back in 2010, or the opportunity sets available today? Because those are 2 very different answers. Like, if I wanted to go into professions just for the money, I would have either worked in petroleum engineering or in tech, particularly like in San Francisco. And I did try to consider the tech startup world. I moved up there and crashed with a friend for a while and went to some VC meetups and met with some entrepreneurs and figure out what they're doing. And I realized in the VC startup world, like, if you're trying to start like one of these venture-backed software companies, there's really only 2 roles that one of the early founders can have. And that's you're either the guy who is the product, which in the sense you're the coder, the developer, or the engineer who invents the technology, whether it's a software or hardware. That's called the technical partner. Or you are the business partner. And the business partner is the sales guy. He's the guy who will go out and pitch the venture capitalist to raise you money, or go to the B2B potential clients, or be your digital marketer for the B2C clients and get sales. Like, if you're a CEO at early stage startup, you're basically chief salesman. And since I'm naturally not a salesman and I did not really have hard engineering or coding skills, I didn't really feel like I had a role there. So if I had to do it again, maybe I would have taught myself one of those 2 skill sets and pursued a career in that and tried to get a unicorn and sell it. And I'd be doing this video from a beach in Hawaii right now instead of my apartment. But I mean, but if I was chasing just money and I graduated from college senior year, I would have pursued the Silicon Valley tech route. If I wanted to actually figure out stuff I like to do, I probably would have stuck with my current path in finance. Or maybe I would have experimented with the Silicon Valley tech path when the financial crisis was keeping employment really low on the buy side. And instead of trying to start my career in finance right off the bat, did something else for a while until the financial markets recovered a little bit, and then pursued my hedge fund career. So maybe that's how I would have done it a little differently. But I legitimately liked what I do in finance, particularly in the investment management side of things. I don't think I would have been as much passion if I went to investment banking or corporate finance or something like that. But I picked my field because I actually like doing it. It's like the ultimate game of chess in a way. It's very strategic and analytical and kind of fits my and I could talk about these and analyze these bigger picture macro trends, which are things you otherwise can't really put to monetizable use if you don't really work in this field. So yeah, hopefully that answers your question. So now let's get to the live chat and answer some of your questions. And again, if you want, feel free to leave a super chat if you want to cut in the line. Otherwise, I'm just going to do them in order for people who wrote them. Let's see. First, Zhao Gabriel says, "Hey, Nick, do you think that lab and imaging analysis being done by AI will lower the cost of medical care? And would a young doctor be able to adjust for that?" I mean, yeah, it would lower the cost of medical care. But I mean, the doctors, I'm not really sure about like the economics of running a private practice, because I've read a lot of mixed things about that, like how you have malpractice insurance and greater expense in insurance compliance and things like that are leading to making it less viable. But I mean, it'd be just like any other medical device in theory. It saves you time and you can serve more patients, you'd make more money. But at the same time, if a lot more doctors can offer it, it could result in more competition, and therefore your the amount you could charge for it goes down, and that could lower profitability. So whichever one of those forces is stronger. I will be right back for a second. I'm losing my voice, but I want to keep going, so I'm gonna get a glass of water. Okay, I'm back. The next question is, would you consider overregulating an authoritarian act? It is in the sense of it restricts economic freedom, but from my definition of really authoritarian, which is basically um, taking away political power from the individual in favor of a unaccountable ruling class, I would not. I mean, it kind of is. It really depends on whether these regulators are accountable to the people or not, really, is the answer to that question. The next question I have is, I definitely want to expatriate and renounce. Do you follow Nomadic Capitalist and George Gammon? I know who they are. I've watched some of their videos. I do have some libertarian sympathies, but I'm not entirely in their camp. Yeah, I kind of view a lot of what the nomad capitalist opts for in a similar vein to people who move, say, from like blue states to red states to escape taxes. In a sense, it's kind of like moving deck chairs in the Titanic in a way. There is a certain threshold that if things got bad enough and the government pivoted to a certain direction that would be hostile to my ability to support myself or my future family, or have a certain level of political freedom that I risk becoming, that I risk just my general liberty too much, I would consider expatriating. I do have a specific country in mind due to just my familial heritage that I could probably go to that would be one of the few that is more free than the US. However, the problem is the US is, of any country that say has more than 10 million people, is the most free country in the world. And so the question is, where do you go? Like, if you're on the other side and you want a government who's more socialistic and wants to take care of you, you have a lot of options. You can go to Europe, you go to Canada, you can go to a lot of other places. Where is if you're trying to go something the other way and you want like an OECD level developed country that has more economic and freedom than the United social freedom in the United States, you're going to be hard to find one. Like and also a lot of these people do have the cost of living argument, but there is a quality of life factor, really, and it depends on, again, what your level. Like if you have a relatively fixed income and you work remote and you have geographical flexibility but not earning potential flexibility, then GeoArb makes a lot of sense. If you have geographical flexibility and income flexibility, then there's different places you GeoArb to. And yeah, and also as an American citizen, unless if they change the rules about the IRS taxing you no matter where you live, the payoff isn't as great. Like if I was a European citizen and I lived in a country with high tax rates but didn't have the worldwide income rule like the US did, I'd be more sympathetic to the idea. But as an American, it's not as appealing. Then let's see. Next question. Happy Halloween. Thanks. I have like a mini costume. I have my cheese head that I bought when I went to Wisconsin. I'll wear it for the next few questions. Um, did you do a UK slash and deep dive? I already answered that. What are your opinions about an American welfare state? Do you mean the current welfare state we have, or how expanding it to be a more European-like one? If it's the second, I oppose. I oppose it. And I have done a video about what an alternative of a welfare state would be like. If you want to have a social welfare system that cares about the downtrodden in your community, you need to have it more localized and have incentives to get people off of it and have it community based so that people in the local community know how to help that specific person with their specific problem that's causing them to struggle financially versus just these top down blanket level welfare programs that create economic income cliffs and other disincentives to actually try to strive. Did you hear that Canada followed the US in putting tariffs on Chinese EV companies like BYD? Um, I've not heard that news, but I wouldn't be surprised if they did because the US tends to follow, I mean, Canada tends to follow the US on policies like that. Um, Thoughts on gold, IRAs, and the like? Seems ridiculous to me. I see gold as something you buy as a hedge or maybe a personal investment in numismatics. Buying it as an investment, eh. A merits of gold as an investment is to protect from inflation, and also if you just believe that real rates will fall, because gold always has a real interest rate of 0. And so it's kind of like a tip with a 0 coupon. And so when people think that interest rates are going to fall relative to inflation, or inflation's go up faster than interest rates, gold does well. And when people think that interest rates are going to rise faster than inflation, gold goes down. And that's why it generally has a negatively correlation to the economy. Let's see. What else, question wise? What would, who are you voting for if it was based on economic policies alone, and why? I'm not going to get into who based on economic policies alone. I don't really, I think it's probably a pretty easy answer to that. You generally want to vote for, at least in America, you generally want to vote for the Republicans if it's just on economic policy. However, like the populist shift in the Republican Party and their lack of fiscal conservatism is something that frustrates me very much. So that's my answer to that. We don't really have a truly fiscal conservative movement in the United States. And I don't think charging wealth taxes to balance the debt counts as fiscally conservative. I think that's fiscally conservative is more on the spending cut focus than the tax raising focus. Let's see. All right. Let's see. All right. What do you think is the end game for commercial real estate? The bad debt. Who has the most to lose? Will it make a material impact on the economy? Thanks. When it comes to commercial real estate, what commercial real estate? Because there are several subclasses in commercial real estate. You have office, which is the part I think you're referring to, which is really struggling because people are working remote. You have retail, which is doing very well actually, because people stopped building retail on Amazon disruption fears, and we found a new equilibrium. I think that'll do just fine. And you have apartment buildings, you have industrial, and you have data centers. Those are kind of the main commercial real estate. um, branches. So I would say, yeah, I'm doing some more deeper dive research into that topic right now. Um, in general, it seems like it will hurt, but it's not going to be anywhere nearly as bad as 2008 was. Um, you have there are the banks who have the biggest amounts of that have the capital to withhold it, or um, there will be ways that they can offload those assets. The losers really are going to be the people who bought these these properties, and they've already kind of taken the losses. And what's also excessive, will they be able to refurbish these into apartments? There's going to also be some implication, though, to certain neighborhoods that are heavily office park based or empty skyscrapers now are going to deteriorate from a public safety and quality of life perspective. But the end game for commercial real estate is that, yeah, those assets will eventually, losses will be realized, and hopefully they don't get bailed out. That is, again, but I got to do more research on this before I have a complete answer. Let's see. Can't wait to see the breakdown of Dallas Fort Worth. That's coming in Geography of Wealth Part 3, which I'll probably release sometime in late November. All right. What do you think will happen the next year of the stock market? I'm not going to really talk about specific trades or investments on this. If you want to ask me about that, just contact me directly. Do you see the USA creating more Wall Street Tech Valley variants around the country? Well, those aren't the only two. It's really just you have industries that America is major exporters of, creates these cities or hubs. And people say, like a lot of people who complain about the trade deficit say that U.S. doesn't really make anything. Why are we used to be the manufacturer of the world? Now we don't make, but the U.S. actually has a lot of valuable exports, and why our economy is great. I'm taking this off because it's starting to itch. You have the major parts of the economy, or the goods or services that we export, that the rest of the world just simply does not offer. And this is why the dollar remains strong and U.S. hegemonic power remains strong. One of them is technology, particularly software and high tech. Like outside of China, which has its own ecosystem of its major tech apps and infrastructure, most of the world relies on U.S. big tech for its tech infrastructure, particularly on the software side. The other thing is finance. The U.S. is the best place to store capital of any major country. In fact, it's arguably a tax haven for most foreign investors due to some rules in states like South Dakota, which allow a lot more anonymity than other jurisdictions in the world. And so that is that's one major export. The other thing is the U.S. is the biggest exporter of weapons. They are the biggest exporter of food, particularly a lot of grains and agriculture. The U.S. has become an exporter of oil and natural gas. And so if you count financial services, technology, weaponry, food, and energy, we export the things that people need to be, not just to survive, but to be a competitive economy. And so that's why the U.S. trade balance is a little bit stronger than it appears on paper. Because also a lot of this stuff, such as financial services and tech, doesn't really show up on the balance of payments. So we got a super chat. First, Christian NOK10. Is that first your comment about the Nordic model, or is that just a thank you? I appreciate it either way. It went straight from 1 to 3. I don't know who number 2 was. So whoever number 2 is, feel free to comment, because I think you got missed somewhere. In your opinion and experience, what are the most overlooked macroeconomic indicators that signal a near-term increase or decrease of the S&P 500? Well, there are 2 of them. One is the ISM services, which I did a video about that a few months ago, but that's pretty well looked. The other one is personal income relative to personal spending. Every month, the U.S. government releases data that shows the average incomes in the country, how much they go up in a given month, and how much the spending going up. And what I like to do is calculate the spread, like income minus spending in a given month. And if you have that number being positive, that is a good thing. It means that people are getting more prosperous and there's more room for savings, for further consumption. Or the other hand, if that's getting negative, that means the saving rate is going down, and that is usually a bad leading indicator from the long run, unless if it's coming down from a very high level, which means people have more confidence to spend. Like during a recession, a declining savings rate might not be as a bad thing, but during normal economic times, that's a major red flag. So if you see, for example, 2 or 3 months in a row where that spread is negative, that's a very red flag for the economy. Or if you see that turning positive when economic sentiment is negative, that's another possibly turnaround, and that has obviously an impact on the S&P 500. All right, now I'll scroll back to some of my previous questions. Let's see. I'm glad I'm having all these questions. I have fun doing these. It just takes me some time to get caught up. In terms of this Wall Street Silicon Tech variance. So yeah, based on the fact that I got sidetracked with the exports thing. So based on that, there are other cities that already fit that role. In the old days, Detroit used to be a Silicon Valley in terms of heavy machinery and cars. And I did a video about San Francisco as the next Detroit about 2 years ago, which kind of explains how Silicon Valley, more importantly, San Francisco itself, is at risk of repeating such a trend. You have Houston, which is the oil and gas center of America, whereas you have Wall Street for big finance, you have Silicon Valley for big tech, and then you have big oil in Houston. So I think Houston is a city that's is already there as one of these industry hub type cities. Seattle can be big tech light. They already have Amazon and Microsoft there, and it has a pretty strong history of entrepreneurship. Miami can replace Wall Street as the new finance hub. It's already like the banking hub of Latin America. A lot of hedge funds and other major investment banks and also a lot of smaller financial companies are moving from all over this country, mostly New York, to South Florida. Dallas has potential to be a city like that, but I don't really know what the industry that Dallas is going to consolidate around. Because energy's in Houston and technology's all on the West Coast and finance is moving more to Florida. But yeah, there could be an AI city, but it seems like a lot more of these newer technologies, I think it's going to be the opposite effect. It's going to be more widely distributed because if people are working remote and you can do collaborations across the country or the world, you don't need to be in a single place as much. There is a value of ID exchange and capital, but it's a lot more of a open infrastructure for the architecture for the world. Thoughts on the Texas and South Texas Triangle. So what is the South Texas Triangle? I understand the Texas Triangle as San Antonio, Dallas, and Houston. And Austin is kind of in between Dallas and San Antonio on that side of the triangle. The Texas Triangle is one of the fastest growing places in America. It has affordable real estate and low income tax, which is going to continue to have new people come. The main real risk for Texas really is a change in politics and the prosperity theory of elections, which the prosperity theory is this idea that when a city becomes more prosperous, it tends to attract younger people or more economically disadvantaged people to move there, and they bring their voting patterns with them, which is often more socially or economically progressive, whether it's good intentions or self-interest, whatever, that's generally what happens. And as a result, these cities vote for policies that make them less competitive. And that happens to the point where things get really bad, to the point where these same young people who move to these cities, the next generation of them moves out of these cities, and the disadvantaged people move out of these cities to the places that are growing. And then as a result of that migration out, then the policies change because it hits a financial breaking point and the city becomes more economically competitive. We've seen this with the upper Midwest, like Michigan and Wisconsin used to be the most socialist blue states in America. And then their industries got weak due to bad economic policy and a variety of other variables, and people moved out. And as a result, they became politically competitive and more economically competitive. Unfortunately, my home state of California is kind of going through that turning point right now. It'll probably be another generation before it adapts and learns to become more competitive. And now, like, Texas is kind of at the stage that California was in the 80s or 90s. And if they're not careful, they could repeat the same mistakes that California did. But the difference is that Texas has a lot more developable land because it's not as restricted by a coast or mountains, which may allow the party to go a lot longer there. The next thing is, hey, Nick, would it be worth developing an LLM model that specializes in math and financial literature to better analyze trends, cycles, and human behavior to allow better market predictions? I'm skeptical of the idea that an AI is going to be able to outpredict the market consistently, because markets adapt, and once they figure out like what this thing is doing, it'll be replicated until it becomes no longer efficient. This is generally how any sort of alternative data or any new trading strategy, whether fundamental or technical, it works early for the first adopters, and then it becomes mainstream and it no longer works. I guess it's kind of like hipster finance in that way. And I think I wouldn't do it for trading, but it might be better. Like you could use AI to make a better version of a Bloomberg terminal and allow people who are doing their own kind of independent research or want to build their own quantitative models to make it easier and faster to do it, which will probably likely speed up how fast the market adapts and how short the timeline new innovative strategies work. What is your opinion using content creation to build wealth outside the normal economy? Do you see it as a viable business for the future? As somebody who is both a real business owner, quote unquote, and a content creator, I have a unique insight on this that probably most people do not. I did a video about this called Why You Shouldn't Be a YouTuber a couple of years ago, which is the idea that a lot of Gen Zs, their dream is to become a YouTuber. But in reality, if you look at the distribution of people who make money, like it's less than 1%. It's about 1% of YouTubers make $10,000 or more a month from YouTube, counting sponsorships and all that stuff. And if you look at those chances, you have better odds of being a high school football player who makes the NFL than being a YouTuber who makes six-figure income after taxes. So that is that's why I wouldn't say that should be a primary career. However, if you have a real world business, like I've seen some examples of a lot of people in a variety of professions who have a YouTube channel that's related to their core business, and then they use the YouTube channel as a lead generation funnel for their primary business. And so they don't necessarily make a lot. They make a decent amount of money probably from advertisement revenue, but they make more money from providing the services of their expertise to their clients. Some of them are like selling coaching programs. Some of them are like accountants selling their services. There's attorneys, maybe, I think, who probably are doing something like this. And a variety of other professions or people who are making a product. Say, for example, you have a car YouTube channel and you're a car mechanic and you talk about stuff or you're a realtor and you talk about real estate in your city. Like that's probably how you would do it. It'd be it's kind of amazing that you have a platform like YouTube that you can get indirectly kind of paid to market your product and service. It's amazing the times we live in. That's probably the way I would do it. You use YouTube to supplement an existing business more than building a content economy. However, if you do want to build something based on content, you got to have a product that's not just ad revenue. It's too volatile. YouTube could Google change the algorithm at any time. And yeah, you don't really have your audience, you don't really have a direct relationship with them, because anytime somebody subscribes, it's not like they're giving you their phone number, their email address, or anything like that. You don't really meet them in real life. Speaking of meeting in real life, one thing I am trying to do with this channel in 2025 is doing a Analyzing Finance with Nick tour, where depending on if your city gets enough votes, I will visit any city that I get. I'm not going to tell you the number of votes because I don't want people to try to game the system. But if I have a minimum amount of votes to come to your city from the audience, I will host a fan meetup in your city somewhere. And I'd like to do that for several cities in America. I have a survey that's in the description or the pinned comment for many videos. Or you could fill it out and vote, or just even if you write it in here, I'll add these. I'll add them to the spreadsheet that I have. If you just type in your city in the chat, and yeah, I'll look forward to meet you guys all then. But back to questions. Does it make sense to buy a house or wait a few years for a single person with no responsibilities other than themselves? Well, it depends. Do you plan on moving anytime soon? Do you like the city that you live in? What city do you live in? Because there's no simple answer for that. Like, you're generally fine if you live in a place for more than 10 years. But again, if you want more specifics for your situation, just contact directly. But I know I don't like that answer, but the answer is it depends. And yeah, what is my view on real estate? Are you talking about commercial or residential real estate? When it comes to residential real estate in the short term, I'm pretty optimistic because of the supply and demand imbalances and structural inhibitors to building, along with just money printing that's going on right now. And just housing is inflation, essentially. So if you're bullish inflation, you're bullish housing. Long term, I'm more bearish due to demographic turnover. It's just a matter of when that ticking point happens. I did 2 videos about this called Housing Isn't Expensive, You're Just Poor, and Debunking the Doomer of the Great Housing Shortage, if you want my more fleshed out view on real estate. Because people ask me a lot about that, and it really hasn't changed much since I made those videos. In your opinion, what cities, states are best for building personal wealth? Well, it depends on your social connections and what your profession is, and what you're trying to do. Like, you want to generally play. Like, if you're just a neutral person, you want to go to the cities that have the highest incomes relative to cost of living. And in America, like, based on the statistics for that, those are places like Dallas and Atlanta, have the highest relative wages to housing costs. Research Triangle, North Carolina, I think, is also up there in DC. But I think that it's really not that simple. Like, if, say, for example, if you grew up in Los Angeles and you have a lot of friends in the business community in LA, and you already know the people who would be like your prospective customers for your business, you should stay in your hometown because you have the connections already. Or if you want to work in one of these big industries like energy or tech or finance, finance I think is a little bit different because it's spreading out because of New York's relative uncompetitiveness. But you want to kind of move to where the opportunities are. But yeah, I don't really think, especially in the age of the internet, I don't really think it's really dependent on cities. You just want to be in a place that's big enough that there's enough happening and there's enough wealth that people can afford to buy your product or invest in your opportunity. I generally like living in affluent suburbs of the major cities in the United States, where those are the opportunities, like the gateway cities, upper class suburbs. Like, if you're just trying to maximize both quality of life from a personal perspective and economic opportunity, if you can afford it, those are the places to go. And if you're retiring, it's a different story. Congrats. Thanks for the content. Let's see. Will you do career advice-based videos? You seem to be very knowledgeable about it. I've done a few career advice-based videos. You could check the archives. People tend not to like them very much, sadly, and I might do more of them. It's just that I haven't tried every career in the world. I kind of know generally how to look at careers because I thought about this really hard when I was in college, because I think the whole point of going to college is to figure out what you want to do with your life. And if you're not really spending at least 1 year in college contemplating what your next steps are, not just I want to take whatever the highest paying trendy job among my classmates, you got to be more deeper than that. Then you're messing up. Like, you have a lot of extracurricular activities, internship, mentorship, academic subject classes that you cover, any kind of subject or field of interest you want. If you're, especially if you're at a school that's U.S. News Top 50 or just of large states, flagship state school probably has the similar opportunities. You could figure out all your possible options and become relatively informed about them, especially if you have the help of things like the internet and ChatGPT now. There's really no excuse not to really to use your college years as kind of like the assessing the pros and cons of each path and figuring out, at least not necessarily what you want to do for the rest of your life, but what you want to try. And yeah, I mean, I have done, I mean, if you want, and any of you who want to do more career advice based videos, please write comments in other videos about what specific, not necessarily your specific career situation, but what kind of career type advice you'd want me to ask. Or maybe I should do something like the Aaron Clarys of the world, where people like send me like some sort of like request to make a video and I publish it for them. I don't know. But career advice is not necessarily my niche. And a lot of parents and my friends' wives hate the career advice that I give people because it's a little bit anti-establishment and a little bit high risk. So keep that in mind before you're asking me career advice. I love your debunking the doomer series, but why do you disagree in terms of global warming? Aren't recent weather trends and science enough to give validity of the doomer position? Well, I did a whole video about climate change. I think you probably watched it, Clay. I'm not going to challenge whether the world is warming or not, because that's not really the doomer argument. The core of the doomer argument is that this has to be a bad thing. Like, I've looked at the NASA projections. Even if they are completely 100% right, you're going to have about a foot in sea level raised at the most. And outside of some very underdeveloped countries or very flat islands who might not be able to handle it, with modern like dredging technology and like relative, and most places having an elevation higher than a couple feet, you will, I think people mostly will be fine. And for every place that is, their climate patterns are hurt, there are places that are helped. It's not automatically a negative game. And that's really my question is like, for like, say, for example, say if Vegas becomes unlivable because they run out of water. Well, maybe like places like Eureka or Southern Oregon coast have California-like climate and become places where you can build the next great cities in America. And that's just one example of many, which is why, I mean, I need to be convinced on that this is guaranteed to be because I think the cost of preventing climate change, based on my research on it, and basically I've read through a lot of these solutions, like if they really want to get climate production down to zero, you're going to either have to have like a permanent like pandemic style lockdown, or you're going to have to reduce GDP and productivity and energy consumption to the levels of at least the 1960s, if not even before that, which would result in a major decline in living standards. So it's a cost benefit thing too. Like the cost of the solution, the medicine is probably more painful than the disease. But I'd be open to be proven wrong on that one, but that's why. Let's see. If you look at the rules for foreign owners, LLCs deals actually better than Dubai. Yeah, that's kind of my point. The U.S. low key is a really good place for foreigners to hold money. Will you do videos on growing wealth, career advice, and your thoughts on the Texas Triangle, South Texas Triangle, Texas, Northern Mexico economic corridor? Yeah, I could. I'll add those to potential videos to the list, Enrique. Um, I don't. I have to do some more research on the South Texas Triangle and the North Texas, Northern Mexico economic corridor. Perhaps I need to visit Monterrey. I've heard it's like a very developed city in Mexico that is worth checking out. Um, Berkshire is opening regional headquarters in Dallas. Think Dallas might compete more Florida over big names like that moving in. Well, Dallas is not really stealing business from New York. That's more Miami, and because New York's mainly financial companies. Dallas is stealing, and has been for the last 30 years, corporate headquarters from Los Angeles. LA used to be one of the cities that had some of the most Fortune 500 companies here in Orange County too. But what's happened over the last 30 years or so is like the tax advantages of moving to Texas has had a lot of companies previously headquartered in California and also Illinois, like Caterpillar moved from Peoria to Dallas too, are leaving Chicago and leaving LA and going to Dallas because of tax breaks and lower cost of living, which means they don't have to pay their employees as much as they would if they had to keep them in California, and just overall a better place to do business environment. And so, yeah, that's who they're targeting. They're targeting the frustrated business owner in Los Angeles who has to deal with the regulations of California, or the frustrated business owner in Chicago. The finance people like going to New York because they already have the cultural affinity. A lot of New Yorkers already have family, live in Florida, or that was their winter getaway, especially in the upper class levels of society. So that's kind of the finance industry. I just think is going to find Florida to be far more attractive. And they also don't have to change time zones and with the way that where the stock exchange trades. Whereas you have that disadvantage for companies who based on the East, financial companies moving west into the central time zone. Texas has more land, but the climate is less attractive than California. Yeah. I mean, that's one of the reasons why I stay here in California. Let's see. You have any experience with do you have any experience with quantitative financial modeling or prediction? What tools do you use? I mean, I've built some very small scale stuff in that. I'm definitely more of a qualitative analyst than a quantitative one. I mean, I have used Bloomberg terminals and similar competitors for data sources. I've had interns, or I've worked on Python models in the past and built those. Yeah, I mean, again, but I use that more for risk management models than a lot of stuff I just build on Excel. I build my own financial models and then I just input the assumptions and I run the data that I get through a data provider and adapt. Nick, have you found any new clients from your YouTube channel? Yes, I have. And surprisingly, I found one when the channel was very small, but but that was kind of but it's more indirectly. I don't directly promote my services on this channel. Let's see. Toronto. What do you mean by Toronto? Do you want me to come? Okay. Oh, these are the cities: Dallas, Toronto, San Jose, NYC. Yeah, I've got votes for some of those, and I'll add these to there. What are your thoughts on the future of the aerospace industry, especially with larger strides due to Elon? The aerospace industry is mainly driven by defense contracting still. And so, yeah, I mean, if you think the world's going to be more geopolitically tense, I think aerospace is going to do well. Also, travel. I mean, the thing is that if you're going to have a more closed off society, that is the risk, is that tourism is going to decline. And if boomers start to get too old, they're at the right age right now where they're old enough to be retired, but young enough to still go on vacation to Europe every summer. When that changes and they become more immobile, that might not be good for aerospace. And also, if we see geopolitical tensions die down, that's another risk. But overall, my view on aerospace is neutral. I think it's going to be an industry that's not going away anytime soon. I mean, it'd be exciting, like if they start to actually like real space travel, like and actually start having tourists to the moon, or we start to have supersonic travel again, and we could fly, say, like to New York to Paris in a couple hours. Uh, those are the things that get me excited. But in general, I think it's going to grow at least at the pace of the economy, maybe slightly faster. I'm fairly optimistic. Uh, will you require ID to be presented to vote, or can we mail in ballots? Are you saying what's my view on voter ID? I don't understand this question here. I mean, yeah. So clarify that for me. Random, but what do you see the future of Brazil's economy? I did a video about this called The Economic Future of Brazil about a year ago. My view really hasn't changed. Nick, would you do a San Diego tour? Actually, my first meetup when it was in January 2023, and I did it in San Diego. And I will go back to San Diego. I like San Diego. I have family who live there. It's a cool city. Like it's my favorite big city, like in terms of a city with 1 million or more people in the United States. Yeah, I prefer living in suburbs personally, but if I was going to live in a big city, it would be San Diego. All right, burn. Let's see. When will the next recession come? My best guess is that it might. I thought we would already have it by now. So, but I think it could happen sooner rather than later. It's just depends on a lot going on, especially with like the election and other things like that. We have a lot of contradictory signals in the economy. And then let's see. What's it called? I have a video about South Dakota and the LLCs in my members only section. So that's where I recorded a long time ago, but yeah, I kind of saved it there as I cleaned up some of my channel. But if you want to watch it, go check it out. Another vote for Toronto, apparently. I haven't been to Toronto since 2017. It'd be fun to go back. In fact, in Canada, really the place I would like to go is are Calgary and Quebec City. I haven't really gotten any votes for either one of those two cities yet, sad to say, though. What are your professional services for your regular job? I operate a wealth management firm. What I do is I manage money for either high net worth individuals or younger people who are saving a lot of money and are rapidly on their way to becoming high net worth individuals. That's what I do. I'm a professional money manager. I've worked in finance for most of my career doing that kind of work. I also do economic consulting for institutional investors and businesses who need that kind of thing. But my main business is my wealth management company. And if you want to know more about that, just contact me through my website or email me. Let's see. I commute to LA almost every weekend. 405 North is hell. Oh yeah, it's terrible. Like you've got to basically go at you got to leave either before 6 a.m. or between 10 to 1 if you want to get through LA in a reasonable amount of time. I've experienced that a lot over the years. We don't have a lot left to expand, but our suburbs are really stable. Tech is definitely in a recession. What is the purpose of interest rates and usury? Interest rates are the time value of the cost of time, the time value of money. Like in a normal world, would you rather have $100 now or $100 5 years from now? The answer is pretty self-evident. You'd rather have the money now. And so how much would you have to get paid to wait 5 years to get your money? And that amount is interest effectively. So if the answer is like, I got to wait, I don't know, 5 years, I want $125 instead of 100, I have to wait 5 years, which means you have a little of an IRR, a compound interest rate of about 4%. I mean, again, it's probably around, again, this is just a hypothesis. My math isn't that strong, but that's the point. That's where interest rate comes from, is like the time that you have to get paid to wait. And time is money. Like that's what that's why you have to have interest rates, because else without interest rates, why would anybody ever lend anybody money just out of the goodness of their hearts? Like, I mean, maybe if in your family somebody would do that, but if you want to have like a growth in an economy and allocate capital from savers to people who can use it for productive things, you you need to have some sort of compensation for the lenders. And the difference between interest rates and usury is that usury is extreme interest rates that are impossible really to ever pay back debt. Like payday loans would be kind of an example of usury, or extreme hard money lenders. I don't really like usury. I think it's but the thing is that the problem is, what is what's the line between a high interest rate and usury? And also the reason why interest rates vary, because there's risk. Like the U.S. government is going to have, when you buy a treasury, you're lending money to the U.S. government. They pay the lowest rate because even if because they have the whole faith and credit of the U.S. government, they have the tax base, they could print the money if they really needed to. So you're going to get paid no matter what, basically back if you buy a treasury. Whereas if you lend money to an individual, their credit worthiness or personal level, or the historical profitability and cash flows of a company are going to dictate how much risk they have relative to the government. And if it's a foreign government, the political history of that government is going to say how much risky is relative to the US government. And so that's why you have interest rate spreads. That's why some things are higher yield than others. And if you are a very high risk person who has a history of not paying their debts, either not going to get credit at all, or you're going to pay interest rates that look like usury, but they're really not usury. It's only really usury if they're doing it in a punitive way. Like sometimes usury is really the market saying you shouldn't be able to borrow money because you are not going to pay that back. And like a lot of people would charge high interest rates just as a way to say no without saying no. Like if you say, for example, I know this is like a unethical, slightly unethical advice, but if you really don't want to do something, what you can do instead is just offer a ridiculous requirement, whether it's a financial price or some other stipulation, that you'd only do it under that condition. And that's kind of a way of saying no without saying no. And I think that's what kind of like these usurious interest rates are in a way. I love your videos. Where did you study and where did you go to school? I mean, I studied economics, business economics, and entrepreneurship at UC Santa Barbara for my undergrad. And I passed all 3 CFA exams, a chartered financial analyst. Though that's really and I've self-taught in a variety of things in finance and macroeconomics and geopolitics and other things of my interest. So that's really a summary of my educational background. I went to a top 50 school, not quite Ivy League, but yeah. And I then afterwards and I did some postgraduate certification stuff, and then I educated myself throughout the way. Do you work with international clients? For example, they have sources of income coming from within and outside the US. Yes, but the minimums are higher. So like I have a certain minimum asset amount that I'll work with the US client. The international level is about double that. if you're curious about it, just contact me directly and I can go more into it there. Which do you think will take over America eventually, Islam or atheism? Neither. I think that there will be a point, like, and this is has been throughout American history. You have cycles of awakenings, and there will be a revival in Christianity in America if it's not already happened. We just don't see it yet, just because it takes time for demographics to turn over. I really think that peak atheism in America was somewhere around the great financial crisis in the late 2000s, early 2010s. But that's a topic that might have to do with analyzing theology or analyzing politics with Nick. Do you have advice for really young college students who are interested in finance and economics? Obviously, it's a case-by-case, any broad ideas. Just read just take a look at the content of I'm not saying take the exam, but just read like the summaries on Investopedia or like a Kaplan guide or the CFA level 1 curriculum. And that will get you a basic understanding of finance. And if you think that stuff is interesting, then you could maybe use some of the knowledge there to kind of like write a case study for employers in finance. Like if you're going to apply to a finance job, you should have a case study with like a specific investment idea or something relevant that can help the bottom line of that company instead of a cover letter. That's kind of would be my advice. Yeah. Is Islam against interest rates or just usury? Islam is against interest entirely. And there's a whole way that they do it called Islamic banking, is where they kind of use the equity market as an indirect way to charge for the time value of money. I might make a video entirely dedicated to Islamic banking. I just been hesitant because I'm not Muslim myself, and it's kind of a very niche subject that I want to make sure I do it right if I cover that. Like in terms of anti-usury laws, that's more the Catholic Church, and usury was defined until the early modern, to like about the 1300s, is really any form of interest, even in Roman Catholicism. But the church relaxed that from interest rates, any kind of interest, to just extremely high interest. And so that's the difference. It's the Catholic Church is against usury. Islam is against interest entirely. Would you say a 780 credit score for a 20-year-old is decent? Yeah, it's pretty good. All right, let's see. Let's go through. I mean, you guys have asked questions pretty fast, so I am going to scroll back up and try to catch up. If you want to cut in line, just feel free to leave a super chat, but I try to do these in order of people posting them. U.S. is really lucky to have thousands of years to develop so much natural resources, land, and growth before the U.S. matches Europe in class dense. Any long-term risk you can think of the U.S.? Yeah. The main long-term risk for the U.S. is more just cultural issues and cultural decay. And also and the fact that really the U.S. adopts a more old world view on class structure and using redistribution to solve problems and prioritizes social stability over innovation. Like, as the U.S. has now had some cities here for over 400 years, some of the class system is starting to harden a little bit. And if the U.S. develops some sort of caste system, whether formally or informally, that's going to, and then they use a lot of the power of the state to kind of enforce it and just prevent competition. That, I think, is a danger. Also, if you have excess levels of immigration and you have a refusal to build new cities from scratch, then you're going to have problems, like in terms of overcrowding of cities and lower paying and jobs not paying well enough for the cost of living. I think that's the whole demographic problem is that in the developed world, the median wage is lower than the cost of living in the median cost of living city. Like, the average income in America is not going to allow you to live on your own in Philadelphia. And I use Philadelphia as the example because Philadelphia is kind of like it's not a high cost living city like in New York or LA, but it's not a cheap city like Houston or Atlanta. It's kind of the middle in terms of affordability. And so, yeah, you need to have, if the cost of living gets too high relative to incomes, it's going to cause a lot of deleterious social problems. So that's another thing that I am particularly concerned about. And also just, again, also the US becoming an authoritarian state, which I mentioned in the beginning of the video, is that if you have too many conflicting value sets and nobody really can agree on basic things like what is right or wrong, the idea of a democratic republic falls apart very quickly. And we've seen that in history. Let's see questions, and keep asking them. I'm just scrolling up here to see if I missed anything. Let's see. What are your views on having kids? Should people have them from an economic standpoint? I'm very positive about having kids. I'll say I'm biased. I'm the oldest of 5 siblings, so I'm from a big family. I don't have any children yet, but I would like to have like probably 3 to 4 kids when I do have a family. 5, the logistics get a little bit complicated, but if you are somebody who is ambitious and intelligent, there are a shortage of people in that category who are having kids, and in general, there's a shortage of people having kids now because it's not just a dysgenic issue; it's just a general like birth rates are low across every demographic variable from people who are younger. And so this is like the Great Depression in the sense. The most successful generation in America was not the baby boomers. It was the generation before them, which was the generation my grandmothers were born into, the silent generation, people born during the Great Depression. Because since times were so tough, people didn't want to have kids during the Great Depression. And so you had a much smaller cohort. And also there wasn't that much immigration back then either. And therefore, like the economy was still growing, and so there's the same amount of jobs, there's the same amount of slots in top colleges, and there were the same amount of like housing stock and other things, but less people to buy them. And so these children of the Great Depression were the first to kind of get in before the baby boom, and as a result, they were able to, if they played their cards right, able to accumulate wealth better than any other generation. And I think the generation after Gen Z, the kids being born, say, post 2008, are probably going to have a very much easier life than all of us watching here because they'll have less competition to get into college. They'll have less competition to buy houses. They'll have less competition for jobs because you'll have a lot of old people still who will be buying the services, but there will be less people to provide those goods and services. However, there is the AI risk for the jobs thing. So that is assumption that AI doesn't just completely eliminate all jobs, which is a whole another topic. But all things equal, and you have to break things down on a single variable basis a lot of times in economics. Like if you are a kid born now, your life's going to be better probably than any generation in American history. And if you want your family's legacy to be disproportionately powerful into the future and beyond, have a larger family, especially if you can afford it. That's my view. Like that's kind of the low key long haul investment really, is having a large family. And there's also spiritual and personal benefits to that. Again, this is also assuming that you can afford it and you find the right person to have a family with, because it doesn't do any good just to have kids that aren't in a healthy, unified family that you don't have the time and the resources to dedicate to. Let's see. Next question I have. I already talked about usury. What is your favorite conspiracy theory? Whether you believe it's true or not. The one that I don't think is true, but is my favorite one, is the idea of phantom time. I don't know if you guys have ever heard of phantom time, but it's the idea that basically the year between like when Charlemagne was crowned around 800 AD and 1000 AD was just completely made up. Like you don't like there wasn't that much happening then. And the reason why, like, there's not that much historical records of things happening then was because it was just filler time, and so it's so like the implication of this is that we're not really in 2024, but we're really in 1824. It would be hilarious if this somehow was true. I really highly doubt it, but that is my favorite conspiracy, is the idea that we're really not like this phantom time. So good question. I didn't really take it seriously until I did that What If Alt History action in August of 2021. But I never thought I would ever get to 20,000 subscribers ever. So the fact that I got to this level is really an honor, and I really appreciate all you guys out here who subscribe to this. Like, I never thought I'd get to this level, but I'm competitive, and I started this really mainly as a hobby because I wanted to get some of my more esoteric ideas that didn't apply to my clients, whether on the research side or in the investment side, but still related to my expertise. And so I decided to create this channel to share them with the world. And I guess the Old Money series is really kind of what hit a nerve with you guys and has propelled this channel, and I'm in awe, and I'm really grateful for it. And so yeah, and now since I am a competitive person, I want to win at my hobbies. Like my main outdoor hobby is tennis, and due to athletic limitations, I'll never be able to beat Roger Federer or Nadal. But in YouTube, I mean, what's to stop me from getting the silver play button? That's kind of my next goal. So I mean, but I don't know how long I'm going to take, but yeah, I'm going to keep making this stuff. I'm not really going to try to chase the algorithm. Like, as you seen my recent video I did about the jobs number that wasn't really as popular. I try to give you guys the stuff which I think you'll benefit from educationally, and that I feel like is relevant to be shared at the time. But I'm going to keep going. I have a lot of ideas. I've already pre-recorded a lot of good videos, and I'm working on figuring out ways to upgrade the content quality in 2025. So you'll probably see some major differences, and that will be, I think, hopefully for the better. And I think you guys will like it. Next, yeah. Next question. I'd love to hear a riff on post-labor economics given AGIs in the horizon, aka fully old. So basically, the Star Trek thesis. I don't think it's going to play out that way, because I don't think humans are not that naturally altruistic, and what jobs get automated is not going to be evenly distributed. So some things will get automated faster than others. And the question is, will jobs automate faster than people leave the workforce due to retirements or deaths from the fading boomer generation? I did a video about post-scarcity economics in the Iceberg of Economics series if you want my full thoughts on this idea. But I think we're pretty far away from that. Yeah, and if they're not competing on economics, people have to compete on something else, because status hierarchies are always zero-sum games. I always thought that an idea might be like, we live in a world, say for example, that everything is made by the robots and none of us have to work anymore. So instead of people competing in the workforce, we just have giant tournaments in various games and sports, like March Madness, but on steroids, where you just have a giant bracket and you pick what things you're going to compete in, and you have a few months to train for them. and then you just have like a worldwide competition. I mean, they already have this for gaming, but we can do these things like for real world activities. If we were in a space communism world, like tennis, or like a, I don't know, a 1,000,000-person bowling tournament, or I don't know who can make the funniest 1-minute YouTube clip, and you base it. I don't know. You could just have competitions like for everything. You like be like the giant intramural, like intramural sports, but that's what people do with their full-time life in college. Would kind of be the vibe. I think that's like the most optimistic way. That'd be pretty fun. I like competing in tournaments. I feel like people complain about the line, but the global taxes are people who never make enough to worry about it. I mean, you'd be surprised. The people who make enough money to worry about it, they definitely are talking about it at the cocktail parties, at least based on my personal experience. What's your take on Burton G. Makiel's ideas, not just the famous ETFs? I don't really know what ideas you're referring to, Beltron. So can you please elaborate? So yeah, I heard you mention Aaron Clary earlier. What's your opinion on him? I feel like he ruined my life by taking his advice at 18 or 19. I think that I had him. I did a podcast a long time ago with him, well before I started this channel. I interviewed him as a guest, and he made me look like a Pollyanna, which is somewhat hard to do. But I think he has some good points, but at the same time, he takes them to a way too dark of a conclusion. And I did a video about this where I ironically say that Aaron Clary is probably the most famous feminist economist. Not necessarily that he supports feminism, it's probably the opposite. But the fact that he's really the most notable person talking about these kind of issues, but translating the gender dynamic issues into hard financial and economic decisions, like he's has some interesting ideas involved with that. Some I agree with, some I do not. And so he is ironically probably the most notable feminist economist. And yeah, I mean, yeah, you got to be careful with some of his conclusions. I think he makes some good points, but I just think he's a little bit too pessimistic. But I haven't seen his work in the last 7 or 8 years. So I am, what's it called? That's my view on that. But it's too bad he ruined your life. Like, but I think that's kind of, he's kind of like a zero hedge as a person if it was a single person in a way. But yeah, I have nothing against him. I think he's doing his best and looking at the world he thinks it is, but you can't lose hope. Next is, as a tennis player, what is your favorite court service? I haven't played much clay, so I can't really judge that fairly. And the only grass courts I played at were at hotels in Mexico where it wasn't really maintained very well. So I guess I'm gonna have to default, say hard court. And don't ever disrespect yourself like that. You're athletically capable of being Roger. No, I mean, the only thing we have in common is we're both Swiss. All right, call into James Ramsey and tell him you're 50K debt at 12 years old. I don't know. Did you rack up your parents' credit card on Pokemon cards? Yeah, I mean, I think actually Dave Ramsey, again, I think that people mistake is they just try to label somebody automatically as good or bad. This applies to Aaron Clary and also to Dave Ramsey. I think Dave Ramsey has some valuable advice about, and I generally have a hostile view of debt like he does. But again, it's really just a matter of what degree. Let's see. What do you read and look at on a regular basis? In terms of newspapers, the only really one I still read is the Wall Street Journal. Like, they are I really only follow news necessarily that's related to the financial markets, because news and politics outside of that is a lot of noise. I have some people I read on X. There's some. I have some people I read from Substacks, and I have an RSS feed of various bloggers and things. I read Seeking Alpha, uh, and so yeah, I listen to a bunch of different podcasts, and I try to read at least, I don't know, 10 books a year. I used to read it like a lot more, but now, like in your 20s, is about learning and reading a lot. And really, ever since I turned 30, I've unintentionally deprioritized reading and more prioritized learning by taking action. So you kind of just need to like you've read enough at a certain point. You have to kind of start learning from applying and just going out in the battlefield of life. You learn more from actually, you have to build the fun. Like a lot of people who say, oh, you shouldn't go to college and just go out there right from the beginning. That's not the answer either, because you need to build a foundation of knowledge. But once you build the foundation of knowledge, you kind of just need to go out there and apply and see what works and what doesn't. So yeah, uh, talk about young men opting not to work was good. That was a good conversation. Thanks. I thought it was a good conversation. The commenters on that video sadly disagreed with me, but I guess I'm up for healthy debate. Yeah, I think there is a real issue of men not wanting to work, and the struggle of the for lack of a better term, the level curve in real life is an issue. And video games have conditioned people for psychologically to believe that the level curve of life is a lot smoother or think it should be a lot smoother than it actually is. Yeah, who will be Big Brother, government or big tech by the 2040s? I think government is more likely to be Big Brother than big tech. I think big tech will have the capability of doing so, but I think they would be, ironically, the government would be the regulator to prevent them from actually acting on it in practice. Yeah, it also depends on what country you're in too, because if government and big tech work together, that's the real scary Big Brothers if they cooperate. What's your thoughts on Martin Shkreli and the whole pharmaceutical industry? Yeah, I mean, he poked the bear. That's kind of, you don't do that. I don't really know enough about individual science of biotech to really see the merit. I don't really follow his content or any of his work he's done since he's been out of prison either. But yeah, that's and the pharmaceutical industry, I'm generally, it depends what in the pharmaceutical industry. I'm very positive on biotech just because there's a lot of good innovations coming in the pipeline, and longevity is a real problem that people are finally taking seriously and looking to address. So yeah. Okay, so how did you get started in finance? What made you choose your career? Well, my grandmother was the one who got me involved in finance. My Swiss grandma taught me how to trade stocks when I was 12 years old, and I got them as a birthday present instead of cash. And my curiosity about it kind of took off from there. I learned a lot of the basic fundamental style investing. When I was a teen, I watched Mad Money was my favorite TV show when I was in the 9th grade. And then after Jim Cramer's Bear Stearns moment in 08 was kind of when I stopped following him. But and then after that, I always thought that's something I'd have to do as a retirement option. I need to make some money in a real career until I had enough money to just manage my investments independently. But then I met a retired hedge fund manager who ran his own family office when I was in college. And from him, I learned that you can actually make money and have a career managing other people's money. And so like, okay, I'm going to do this for a living. All right. So, and I chose this career because it's intellectually stimulating and it has enough upside that I can live like a similar upbringing that I had in my own childhood or better. And it allowed me to have like entrepreneurial potential, because that's something I always valued, is wanting to be my own business owner. And it allows you to have like the upside of like a sales focused career without being a salesman professionally. It's very, you're competing every day. It's kind of like why a lot of former athletes get into Wall Street. I was never really physically talented enough to be a good athlete, but I had that competitive streak and I wanted to kind of get involved for those reasons too. I like the chess playing analytical side of it. I like the fact that I can have this broad knowledge that I have and apply it to things that actually can make money for my clients. And I also like how what I do, I work in the best interest of my clients. I don't have to, it's not a zero sum game, or I'm not trying to just do some like quick buck from a commission or something and then move on with my day. Like my interests align with helping the people who I help. And I like that too. So I can do what I do with and sleep at night. But yeah, what's my background? I know your name's Italian. Well, I'm only about an eighth Italian by blood. I'm half Swiss German on my mother's side. I'm a quarter Portuguese, particularly from like the Azores and Madeira. Apparently, Cristiano Ronaldo is my fifth cousin. I mean, I don't really know him, of course, but that's what my genealogist relatives have told me. And on my rest of my father's side is my great grandfather is Italy from Tuscany, Lucca specifically. In fact, the mayor of Lucca has my last name, Pardini, and he moved from Italy to San Francisco in 1916, and he married my great grandmother, who was an English woman whose family was one of the first Anglo families in California. They moved to California in the 1840s before California was a state. So I'm multi-generation Californian, and from my English side, and the rest of my ancestors came within the last 120 years from Portugal, Italy, and Switzerland, whereas my grandparents came to the U.S. from Switzerland. Let's see. Let's move on. Next question. All right. Burton K. McKeel. His idea is that nobody can beat the market in the long run, and therefore investing in low. Okay, so this is just like standard efficient market hypothesis, like Fama-Franch theory. But it depends on what beating the market. Like if you're trying to have a long only large cap U.S. equity strategy, yeah, like the statistic about 85% of mutual fund managers fail to beat the S&P is true, especially net of fees. However, not every asset class has an index that is designed in a way that it's very difficult to beat. Like if you look at the statistic for bond market traders or commodity traders or emerging market investment managers, the active managers do a lot better. So I don't really believe there is an efficient market hypothesis. Cliff Asness did a recently good paper about this, which I might put in the description of this in post-production. But yeah, I generally think that he's wrong on that, unless if you have a very narrow definition of what the market is. Another idea is that people should protect with insurance as much as possible. Maybe not all types of insurance, but generally the ones to try to protect against unforeseen events. It depends on the cost benefit. Like, for example, like there are certain types of insurance that you're going to spend more on insurance premiums than you'll ever get back, even if something bad happens. Like, or it's just not worth it given the probability is low. Like example, like I'd say like phone insurance on an iPhone. Like if you pay, I don't really even know what it's like, $50 or $100 a year for that, for the phone insurance, or even less, even if it's like $50 for 3 years. And the probability of your phone getting messed up is about 1% a year. Then like, and the cost of replacing the phone is $1,000. Then you have 30, and I'm just using these numbers as an example. Then then the expected value of that insurance should be $30. But if you're paying 50 for it, then that's a bad deal. And you just have to do that kind of calculation with insurance. And usually the right tail or the left tail, sorry, the bad outcome is so bad that generally insurance is worth it. This is the case with car insurance. This is the case with health insurance. Like, yeah, it sucks to pay those premiums, but if you go to the hospital and have a 7-figure um, hospital bill, then you're glad you have that insurance. So, like, you have to look at what the reasonable tail outcome is versus how much you have to pay for the premium. Something like a cell phone insurance doesn't make sense. Something like health care insurance, you better have it. Yeah. Then let's see. Oh, he is there. I've read Random Walk Down Raw Street. I just didn't remember the author's name. Thanks for that. Do you think there's a cultural battle between state schools and private school colleges, historically being old money and higher class being put into the middle class through state schools? I don't. I think that the battle really is in the high school level, where you have the new money kids trying to compete with the old money to try to get into the Ivy League schools or Stanford or the elite state schools like Berkeley and UCLA, UVA, Michigan, etc. UNC Chapel Hill, I'd probably put in that category too. But I mean, I think that stigma is starting to go away. I'm going to be doing a video about old money in the Ivy League where I go into more detail on that one. Yeah, what? You're Swiss? Yeah, I am. Who's winning the World Series? I don't know. I'm not really watching the World Series right now. It's Game 5 and it was going on. Did the Yankees win Game 5 too? I mean, as an Angels fan whose family is San Francisco Giants fans, I really hate both of these teams. So, I mean, I don't really want to see either one of them do well. But I think probably the Dodgers are the more talent. Sad to say, but yeah, that's my guess is the Dodgers end up winning, especially since if the Yankees did win Game 5, it's going back to LA. Am I married? No, I am not married. Let's see. Would you share economic advice for girls in their 20s, career planning, futures, kids, etc.? Yeah, I mean, I don't know. I grew up with 3 sisters who now just are leaving their 20s, and like, yeah, I mean, I have to have some perspective on this. But like, it depends really what your goals are. Like, to be honest, like, not everybody, it depends. Do you want a family? Do you want, like, how much stress can you handle professionally? Like, do you want, like, what do you want to start a business? Like, I generally think my career advice might apply balanced more towards men because that's my background, of course. And men have longer times to start families, so they can afford to take more risk. But I have to think about that because there are different considerations there. Best way to actively, but yeah, I mean, I think I'm going to consider that for a video. And I actually have a colleague of mine who could help me make a very good one about the idea of career and economic advice for women. Best way to learn actively trading stocks for someone with some background knowledge. Books. Yeah, there's a few ways you can learn. One, you can do some paper trading programs, preferably ones that don't don't allow you to trade during after hours because that's kind of cheating. However, like, paper trading is one thing. When you have real money on the line, your brain works a different way. The lizard brain comes out. And so even if you become the greatest paper trader of all time, it's probably not going to mean much. In terms of books, download my book list. You start with the Market Wizards for inspiration, but if you want to learn hard stuff, depending on the asset class, read the CFA curriculum, read Nathan Berg on options if you want to learn about options. Read Hot Commodities by Jim Rogers if you want to learn about commodities. What's it called? Read the Bond Book if you want to learn about bonds. Even though that one's pretty dry, to be quite honest. Yeah, that's kind of, those are good places to start. When you finish with those, you can get back to me. Yeah, let's see. Tips for getting a quant finance job in SoCal as a math PhD grad. I never tried to get a quant job. I figured that if you have a PhD in math at a reputable university, that you can that those jobs are available. I just give the same advice to any other finance professional. Attach a case study showing what you can do with your resume. Like, I don't really know in the case you would literally send them your Python model, but you could say, look, I built this model that does this. It got these kind of returns, and this is how I did it, and and explain, like, write a white paper. That's probably the equivalent for math people. Like how they have white papers for cryptocurrencies. They'll write a white paper about your investing process and how you can use your skills to add value to the fund you want to work for or the bank. Do you think the U.S. will ever have a substantial manufacturing industry? And do you think it will save many of the declining urban areas in the Midwest? We do have a substantial manufacturing industry. That's a myth that we don't. Employment has gone down. In terms of manufactured output, we're at all-time high. And it's gone up the entire time in the history of this country. What has gone down is employment due to automation, technology, and certain lower value manufacturing being moved overseas, and higher value manufacturing that requires less workers and more mechanized processes staying. There's still plenty of factories all across America, even in the Midwest. I drove past several of them when I went up to Wisconsin and in Illinois and Indiana a few years ago. And there are a bunch of them being built in Texas too. And there's a lot of light manufacturing still here, even in California. But yeah, the difference is that it's all more automated, and there's going to be less jobs required. And that's why you've seen these places hurt, is because they've been displaced. And so, yeah, I think we're having a renaissance in manufacturing right now. That's why industrial commercial real estate is doing so well. The question is, will it be the employment boom that people hope? I doubt it. What's it called? All right. Should the average investor who's not... All right. I'm not going to comment on my dating life on this the channel in the respect of privacy. Let's see. What is the old money most afraid of? They're most afraid of ambitious new money. How much more can the U.S. consumers take in terms of prices, politics, and housing? That's a good question, because I'm surprised they've taken as much as they have, to be quite honest. I mean, maybe it's the video games. Maybe it's just cheap breads and circuses style entertainment, or that the combination of destigmatizing living with parents and enough jobs that pay just well enough that you can afford an apartment, but not much else, that don't require too much effort other than a college degree. The fact that there's enough of those still around just makes that people are too content to really rebel in the way that they did in the old days. Or maybe just the population is too old. When you have a high amount of people, say over 55, those people don't have the energy. So yeah, I mean, and also for a lot of people, things aren't that bad, to be quite honest either. So yeah, I mean, I don't know. I think if housing prices doubled again in real terms, I think that's what would do it, to be quite honest. I think housing is the linchpin. Like in previous revolutions, it was food. And when they had the let them eat cake moment and people were running out of food, and that's kind of sparked the French Revolution. I think it'll be this time, if there is a catalyst for an asset price, or like something that gets too high in price, it's probably housing. Yeah. Let's see. should the average investor who's not interested in picking stocks just dollar cost average into an index fund? If you have less than, well, again, I'm not going to get into specific advice on here, but if you're, so I'm not going to say the dollar amount, but if you have a relatively small amount of money, that makes sense to do. When you have a larger amount of money, you should be doing other more sophisticated strategies. That's all I'm going to say about that. Hi, Nick. Awesome to catch where you live. What's your opinion on breaking into Wall Street financial modeling courses? Is there anything you'll recommend learn financial modeling? I took one financial modeling course in school, but apart from that, it's kind of something you just figure out. I need to build something, and then you just kind of can educate yourself on what you need to build. That's kind of how I learned it. But again, I'm not really a rock star financial model. Like a lot of the ex-investment bankers who I know make way more detailed models, but every model is really reliant on the assumptions built in. Are you disappointed in that Ohtani left the Angels to join the Dodgers? Of course I am. I mean, I don't blame him though, because the Angels couldn't develop any pitching for 6 years when he was on the team. And then Trout, they actually always had good starts to the season, but then Trout would get hurt, and they didn't have any other pitchers other than Ohtani, especially in the bullpen. And so the Angels would end up fading every season, and it is super frustrating. And now I just can't really pay attention to them unless they're over 500 after Memorial Day. Otherwise, it's just more of the same. And I think the Angels are struggling right now. Where do you feel we are in the cycle? Are you referring to the business cycle, Matt? Stop asking about sports. I'm not watching the World Series. I don't really I don't particularly care about either one of these teams. No, I do not have a child. Is legalizing abolition good for the economy? Do you mean abortion? That's not something I'm going to talk about on this channel. What if that's the question? IMO efficient market is true. As money grows, harder to generate a return above the benchmark. That's why hedge funds have a lax limit. Well, there's scale. That's the problem with there's certain assets that are just too illiquid, and the hedge fund will move the stock price by just trying to enter into a position. That's why it gets harder with scales, because if you get too big, you have too much of an influence on the market. It's not inefficient market hypothesis necessarily. Do we have free will, or do we want to experience, or do we like a movie, given our brains are similar to a computer program? I think we do have free will. I mean, I'm not going to get into my religious beliefs, which will elaborate more on why I think that's the case and the details, but the answer is, yeah. What are my favorite companies? What do you mean in terms of what's it called? My favorite, my favorite companies, like stuff I like to consume, or or like stocks to buy. I'm not going to answer the stocks one, but I don't know. Are there finance jobs in SoCal? Yeah, there's a lot of finance jobs in SoCal. There's a lot of bond shops. There's a lot of wealth managers. There's a lot of banks. It's more in LA and Orange County than San Diego, but yeah, there's plenty. Yeah. As an ambitious one with end up in new money, any advice about how to navigate society? That's too long of a question. What are your general thoughts on Milton Friedman? I generally like a lot of the ideas of Milton Friedman. I'm generally a fan. How can I or anybody else have you manage my finances? You just contact me directly through email, or go on my website, nickpardini.com, and find the form if you're interested in working with me. I understand you don't want to give financial advice. I'm trying to figure out the best asset classes that I should be investing in. Which books do you recommend regarding this topic. I don't know if there's a single book that's going to recommend what asset class you read in. I recommend buying books to understand each asset class individually and work your way from there. You find my book list by joining my Substack mailing list, and you'll get an email with it. Yeah. Let's see. I'm getting a little tired. Do you think market makers in general do good for the nation? I don't think they're inherently good or bad, but they allow they add liquidity. And so like if things move a lot up or down, you can get in or out of your positions. Like if there's no bid when you try to sell, that's more likely a crisis. Has Freakonomics influenced you in a way? Yes, it probably has indirectly because I try to find counterintuitive explanations on why things happen. Do you think I'm not going to comment on that? At what stage do you think we're in AI as far as advancement? I think we're in early stages. And with that, I think I'm going to end this. My voice is going out and it's been long. Thank you guys all for watching. Have a good night. And yeah, I'll do one of these again when we hit another milestone.